The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 30th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. How about we have an extraordinary one? And you know, the easiest way to do that, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means you and I can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and most importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, we've got you covered. Let those fingers do the walking. You can send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question, and in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Only Treat Tuesday. There's no tricks here, only treats. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow trading up 122 points, 24,565 is the print. S&P's up 11, NASDAQ up 9, Russell's up 17, and you got the semis up 2.25%. They're trading out at 1166. That's up 26 points. It's the trannies that are up 1.7%, trading out 10,058. Mean and green across the board. Spot volatility index not moving too much, down about 0.5%. That's 16 pennies. Gold's off $2.40. Silver is up 1 penny. Light sweet crude is back $1.03, trading out at 66. Now, even Steven. Speaking of even Steven, and I don't know what that means, but leading the charge the upside, it is Credit Acceptance Corp of Michigan. I believe that's used to be the General Motors. In any event, not General Motors, a stock company, their credit company. It's up $38, nearly 10%. Booking Holdings up 38. That's 2%. Mercado Libre up 7% or $21. You've got some big movers and shakers. Boston Beer, Sam Adams up 19. Chipotle up 15. To the downside, Amazon, 26 points. The downside, nearly 2%, 1.7%. Allergan off $13 or 7.5%. Ulta Beauty down 11. Tesla off 9. So certainly things to take a look at. Let's see. Ruby in the Den says, can you look at the Dow futures? Do you think this has a bottom or the making or still more to go down? Good question there, Ruby. I don't know. What do you think? I don't know. Dow equity futures, if we take a look at it, here's what you and I know. Let's go with what we do know. And what we do know is that today, even though that it's up, no big deal. We don't even have a bullish reversal candle here, Ruby, right? And so with that, what this means is what? It means we could have made a bottom yesterday, but nothing confirmed yet. It means we could move sideways. Means we could move lower, means we haven't made a bottom until we see a close above Stevie's red line. That's what it means. The red line number is 25,005. It's not the kind of red line, when you step on your accelerator and you really get to the red line. This is the red line of acceleration, which right now is resistance. So to answer your question, do I think it's made a bottom? It's possible. Has it confirmed a bottom? No, it has not. So if it hasn't confirmed a bottom, then what's the outlook? Could absolutely continue to move lower out here. It just simply can. But likely the outcome is moving sideways to lower-ish. And when we say it's likely to move lower, actually, Ruby, the signal doesn't come. I don't think it'll come from the Dow. I know you're saying, wait a minute. What do you mean, jelly bean? That's what I would be saying. And what I mean by that is it's really about the Russell 2000. Yeah, I think it's the Russell 2000 that tells us where the next move in the market is. Now, here, if we take a look at the daily equity futures contract for the Russell 2000, we're going to see, just like yesterday, we're going to see how price has tested Stevie's red line, the oscillator and change line, tested and rejected it. I sent out an update to subscribers at noon so they would understand what was going on. And basically, one piece of the update was if sellers are going to show up, it's like right around now. Why? Because price inside the Russell 2000 equity futures contract was testing that level of resistance. Now, that's 1503.40. Let's call it 1504. I don't know where the Russell 2000 equity futures contract is going to close its session today, but if it does close over this, Ruby, that's got to make you say, something to think about. Now, the reason would be you should have a bullish reversal signal today, in this case, a bullish engulfing. You'd close above resistance. We haven't seen it close above resistance since way back in September. So that would be a good thing. Now, the counter trend rally inside the Russell could run out of steam at the bottom of its daily profile. That's measured at 1543.40. We don't know. But what we would say is that the Russell 2000 just gave you a bottom signal. We don't have that just yet. We have the makings of it, and you asked about the makings of something in the Dow. The makings really are inside the Russell 2000. Inside the Dow, the message is just simply not clear. I know you'd like me to give you a clear answer, but this is how I can give you a clear answer. I say pay attention to the Russell 2000. Pay attention to it. And it would not surprise me that what you see, just like when I sent out that update, is if the sellers are going to start firing away, it was right then and there as price was testing that level. So I hope that helps you with regard to what the Dow equity futures contracts are doing out there. Now, to take it another step further, because I don't have any other questions out here, and to really put things in perspective as to why it could be a bottom, is by just simply taking a look at the Dow itself. If we take a look at the Dow cash index out here, we're going to see that price has come down and it's testing. I don't know. This is a monthly chart, so I really need to see tomorrow's close, Ruby, and that is, does price close above Stevie's green line? That's the diagonal green line that takes a look at the high in the Dow in 1985, the high in the Dow in 1987. That trend line happened to contain price in 2010, and in 2017, we saw price move above it. Specifically in November of 2017, we saw price break above that level. All that was taking place basically in February through April was a test of that. We then saw price move off of that, get back to the January highs on a monthly basis, and this month here, unable to move above it, it has now pulled back and it's testing support. Now, if it closes underneath that support level, a retest of the consolidation area, 23,377, would be in order. Steve Rhodes with TFNN. We'll be right back in just a momento. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So let's go to our first question coming in from Olympia, Washington, from Nancy A. And the question is, can we take a look at Apple? We most certainly can. And looking for a tradable bottom. So let's go ahead and take a look at what we do know about Apple. In this case here, and I know they're going to be reporting numbers on Thursday, I believe, is the day. But as we take a look at it on a daily time frame, yesterday was a close below the bottom of its daily profile. Now, we haven't seen Apple trade below the bottom of a profile since July of 2018. This is the daily time frame chart that we're. I take that back. There was a bit of trading below the bottom of a profile back here in September, early September. So let me restate that. But yesterday was a close below that. What it means is that we had a close below a level of support. That level was 214.44. Today, so far, we've seen a test and rejection. Old support now acting as resistance. So what I would say is this a tradable bottom? Probably not. So what else could we say about the daily time frame? Well, the swing point is this little doji candle out here, which has volume on October 11th. The volume there was 53 million shares. Yesterday's volume, 45 million shares. Today we're at 21. So it has not been passed with volume, meaning, not a lot of enthusiasm for selling this equity out here. Nonetheless, price could still move down and form an A to B equals CD to the downside, or Gartley buy pattern on the daily time frame chart. The uno to uno, the one-to-one move, meaning the same length of the A to B attached to the C, would get you to 203.08. Or 212, not a big move to the downside. But this could extend beyond that if it is an A to B equals CD to the downside, 197's game, 190's game. Well, when we start taking a look at that pattern, then what we can do out here, and you're looking for a tradable bottom, let's just say right now, resistance is holding, support has failed, and that says price could pull back to where it last had a sign of strength. The real last sign of strength was August 1st, 2018. And that was at a price level of around 197.31. That's the bottom of that day's session because of the gap to the upside, or it could be the high of the prior day on July 31st, which is 192.14. Big volume there. Now, when I say big volume, I'm referring to 67 million shares. So the daily says, nah, you don't really have a tradable bottom, at least not one that, from a technical standpoint, that passes muster. Not mustard, but passes muster. And there's nothing wrong with mustard, especially on pretty much everything. If we take a look at Apple on a weekly basis, well, I don't know where the week is going to end. But right now, it is testing and trading slightly below the weekly profile. So the level to be watching here, Nancy, is the price point of 213.43. Your 212.32. If you close below that, that would suggest lower price as well. Lower price where? I would probably be looking at the July 9th level around 187 as one possibility. Now, 187 is going to be different. I think it's different. Is it different? Yeah, slightly different than the levels that I gave you because I was looking at July 31st high around 192, although not too shabby, not too bad. Now, on a monthly basis out here, and the month has not ended, really no damage. Now, this is a three-river evening star, and that says, okay, resistance is the high of October. Well, that was pretty easy to see. But there's no trend that's been broken. Price is trading above the oscillator and change line for a monthly time frame out here, which is 202.69. So you're looking for an entry. I just don't see it here just yet. I don't see a tell, so to speak, for the market ahead of earnings. So what I would do, and then look, let's face it, the NASDAQ has just, been pretty much trashed out here. Just imagine if Apple had really been participating to the downside. In one sense, it really hasn't. Well, it was up at the 230 level. It's down about, what, 10%, 23 bucks? Down around the 212 area. So, Nancy, I hope that helps you out. I just don't see that tradable bottom here just yet, or some tell before the release of earnings. Thanks so much for writing in. Now, no other questions that I see. Nothing inside the old tiger's den here. We were taking a look at this chart. This chart here, the monthly chart for the Dow, probably more important to you and I come tomorrow than today, but we're going to look at it today. And this shows the consolidation that the Dow has been trading within, around the 23,370 level to the 26,616 area. And then there's some trend line support that it has been testing. What happens if the Dow breaks below 23,377? Absolutely a possibility. Well, then price will come down and test this blue line. And to test that blue line and to give you some type of price, what I would do is I would just change this to a logarithmic scale out here, and we would be watching as price got down into that area. I'm just simply going to have to watch, but it's in the 19,500-ish area, potential. Well, 20,570. What am I saying about 20,570? But look, you got to take this thing one step at a time. Right now, support is held. And support is held not just there, but support is held here. Now, this is the interesting thing. Well, at least Steve thinks it's the interesting thing. If you're trading the Dow and your local currency is pound sterling, I guarantee you're not selling. You're looking at this chart, and you were buying at 18,940 in pound sterling. Right now, you're trading 19,325 because you're looking at it and say, geez, all this was in my local currency was a pullback to test support, old resistance, which became new support. And if you're sitting over there right now in Gay Patty, you're having a little nice almond croissant this time of the day, although that sounds like breakfast, but hey, you can easily eat that for dessert. You're also saying, no big deal. Just simply a pullback to 21,461. That was the old resistance line that is now new support. Over in Japan, in Tokyo, and Hokkaido, they're having some nice Hokkaido uni, maybe a nice scallop or something like that. They're saying, well, I don't know. We're back inside the consolidation range out here. Maybe we ought to just wait to see what traders in the U.S. do. So we've got buyers, and we have some sellers out here. Who's telling the truth? I don't know. Prices at support. If we take a look at what is going on inside the Dow Equity Futures contract, interestingly enough, price came down and tested a trend line that it had broken. That's from the high out here in January. And then the next high that we look at is June 11th. And somehow price stopped right there. Here's the key, though, for the Dow Equity Futures contract. Really, it needs to close above 24,745. You're at 24.5 as we speak right now. If it does that, all price has been doing is trading with inside its weekly horizontal trading range boundary lines. That was brought to you by Bud Rolfs because he's the one who taught us that. And if we take a look at the ES Mini, There's no breakdown here, nervous or otherwise. None. Zippo. Zero. 2650 is the number. We're trading at 2648 as we speak right now. That's its monthly, because it's in red. It's monthly horizontal trading range level of support, let alone the rising price channel. That's right. You're looking at a rising price channel. You're looking at two of them. Why? Because once you break one, you then go and you take that same equidistant level, add it to the top of, in this case here, that price channel, and voila, that is where price in essence stopped. Back at the highs out here in January 2018, as well as in October, September 2018. So what do we know about the Dow? Pretty much sitting at support. What do we know about the ES Mini? Definitely sitting at support. Very interesting, says Artie Johnson. Steve Rhodes with TFNN. Be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, the next question up here, only one that's in at this moment. So if you'd like to like me to put a set of eyes on one of your holdings or something you're considering, just send me an email, steve@tfnn.com. Just put radio show question in the subject heading, or you can give us a call. It's the easiest way, 877-927-6648. This question is asking if we could take a look at General Electric, I don't have a name on this, just a number. No name, just a number. But do we see any long-term support for General Electric? And the answer is yes. So thank you for asking about long-term, because that makes it easy. What do I mean by that? I mean, we can just simply open up the monthly time frame chart. And we open up the monthly time frame chart. Here's what we know about General Electric. It's trading into its swing point from the month of March of 2009. Now, when it formed that bottom, it did so with volume of nearly 6 billion shares. We have one more trading day tomorrow. It's not going to get anywhere near that volume, so you're pulling back into that swing point. By the way, the top of that monthly swing point is 1135. We're trading at 1002. Assuming that it closes below 1135, then price should go test and target $5.73. Yes, another 50% haircut out here. It's just technically speaking, when we take a look at this, even though now look, you don't have to go test the bottom, but as long as price closes inside that candle session, odds favor that it'll happen. If it was being pushed with volume, then we would say, yeah, looks like it's going to go test that low. But at this stage here, you're asking for, now I don't know if it's support. That's the thing. It just means price is likely to go back there and test it. And you're going to have to take a look at the volume, should this occur. What's the volume when that level gets tested? Can General Electric go below $5.73? And the answer is, of course it can. But $5.73, we're trading at $10 right now, is likely where it's headed to as we take a look at this from a technical standpoint. Can it go lower? Yeah, of course. You know, we can go take a look at what it was trading at in 1979. We can get back to $1.95. So yeah, GE can do all those types of things out there. And if I were to go look at the daily time frame charts or the weekly, we're not going to see anything inside those charts that tell us that there's some kind of bottom formation inside of the old General. So that's what's going on with GE. Hope that helps you out. Best of luck on that trade. No other questions in here, so let's take a tool around some of the other charts worth noting. How about we take a look at the New York Stock Exchange? So the interesting thing here, when I take a look at this chart, is the bottom formations, the ones that have provided, significant bottoms, such as the one back here in August of 2017 and the one out here in February 2018. What we had going on is similar to the pattern we have going on right now. We had a rising bottoms, advanced decline oscillator reading. A rising bottoms, advanced decline oscillator reading. That's a mouthful. But nonetheless, that's what we had in the face of price moving lower on a closing basis. What we have had here is we know that the advanced decline oscillator reading got down to that real negative, real oversold, real bounceable area of minus 291.30. Yep, that's what it got down to. And now what we can see is it continues to make higher lows in the face of the New York Stock Exchange, making lower lows out there. So what does that mean? Means there's a possibility, just like it did before, that the New York Stock Exchange is trying to generate a bottom signal. Has it confirmed just yet? The answer is no way. It has not. Now, if there was enough advancing issues over declining issues to push this advanced decline oscillator reading above zero, right now the reading is minus 80, boy, then we'd really have something to talk about. But that's probably not the only thing, right? If we take a look at how do we want to do this? How do we want to do this? I guess I don't have a choice, do I? Nope, I guess I don't really have a choice. So let's take this Apple chart out here. Let's take a look at the New York Stock Exchange, and I'll just say, just ignore the profiles that are going to show up on it. But let's go take a look at it, and give me a moment here. I don't know why I was all the way down in the S's, but it was. Not that that's a bad thing. It's just going to take me a while to get up to the New York Stock Exchange. There we go. Now it's starting to work. Now, slowly but surely. See, what we're going to do is we're going to go take a look at the chart pattern on the daily time frame, see if there's anything special as well that we can pay attention to assist us with the message of the markets of the NYSE. And that's about all the time I can kind of go on here and fill up, so please work with me. I'm not referring to you. I'm referring to you inside my computer. Let's get going out here. Come on. We got places to go, people to see. Here we go. Let's find the New York Stock Exchange, and let's go see what kind of pattern is unfolding on the daily time frame charts out here. Oh, my goodness. It's like the little mice are spinning. There we go. We got price moving lower, doing less relative energy out here. New York Stock Exchange needs to simultaneously, that doesn't have to do it at the same time, but pretty close to the same time, get the advanced decline oscillator reading above the zero line. We're not there yet. And get price to close above Stevie's red line. We're not anywhere near there yet. 12,162.72. But I would be looking for that. That's an interesting chart pattern to pay attention to, because we don't see them too often. So that's what's going on inside the New York Stock Exchange. What else can we go look at? Let's go take a look at the let's go take a look at gold. Goldilocks out here. What's gold doing? Gold today pulling back, testing support. What was support? The bottom of its daily profile. That level was 12.24.10. We got that down to 12.21.40. We're trading at 12.25.70. So far, support is held. If we take a look at what traders of gold in pounds are doing, they're buyers. They are buyers of gold. They're certainly not selling. If you take a look at traders of gold in yen, they look like buyers too. Buyers to sideways, not really selling. If we take a look at traders of gold in euros, yeah, looks like buyers too, just kind of sideways. There's not a whole lot of selling going on in the local currencies out here. So this should hold gold in dollars out there. I recognize that the U.S. dollar index is up. No big deal. Hey, let's go to Paramus, New Jersey. We've got Victor on the line. Victor, thanks for calling. Thanks for holding. How are you?
Good, good. I had this dream that we wake up next week and we retrace back to when the president was elected, and that'll be our little market correction there.
Well,
geez, the gaps in the market.
I got to tell you, Victor, your dream sounds like somebody else's nightmare.
That's my dream. That's my wish. We got to clean this all up. Otherwise, there's going to be no smooth sailing.
You don't want to get in on this move in the Dow until it gets
out of the way, man. I don't know. They're playing games.
All right, so Victor's in at 17,931. Is that what you're saying?
After President Obama was elected, the market crapped out the next day, big time.
Yeah. Well, look, I would agree with you that that a lot of this decline is because of the uncertainty of the election, and I say that mostly because when I take a look at the volatility index, and if we take a look at it versus its futures contracts, you've got the spot volatility index trading at 25.38. And we can go out to June of next year, 2019, it's trading at 1980. We can go out to November of this year, it's trading at 2160. Things are out of whack. I think this gets into whack after the election next Tuesday.
You can't raise interest rates that quick. And he even said if you raise interest rates,
hang on here, Victor. We're going to go to a hard break.
And you know the interest we're repaying on all the money we owe? You know what I mean? Comes out to a lot of money.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Paff's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the quantitative edge under the newsletters tab. TFNN.com, educating investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Sandy S. writes in, and Sandy wants to take a look at ticker symbol LASR. That is Enlight Inc. They are a laser company. I'm guessing you probably figured that out, and they're located out in Vancouver, Washington. I guess they have operations in Shanghai, China, Hillsboro, Oregon, and I don't know where else, but doesn't matter. So what Sandy wants to do is go do a little bottom fishing. She's looking for a big, or he's looking for a big grouper out there. And so and because this is basically, its all-time low was, hit during this week, a few days ago, 2 days ago. What's today? It's Tuesday, so Friday. It looks like their all-time low was hit. That was at a price point of $16.25. You're trading right now at $17.23. I say you need patience, Sandy. Patience. Patience here. I don't have anything further back on the left-hand side to tell me what this might be going up against. If this is formed about, I don't have any other good patterns out here. And I looked during the break, Sandy, to see if I could find some other type of pattern, to clue you in on, and I don't have it. It's possible that it has formed a bottom, therefore. And I say it's possible because price over the last couple of days has started trading over Stevie's red line. That's possible. So a small little positive there. But if that's the case and it has bottom, what price will do is it will begin trading over the top of its market profile. This is a brand new profile that formed today. The bottom of the box here is 1658. The top is 1854. At a minimum, you need to see price close over that. Then I would say, at a minimum plus volume, meaning October 17th, this traded up to a high of 2019 and did it with volume of 212,000 shares. You'd like to see this get some giddy up and go out here. Ideally, Sandy, you're looking to buy Laser or Enlight Inc. Maybe ideally this thing goes sideways for months and months and months. And you see all kinds of accumulation going on light volume, similar to what we have. And then you see some kind of sign of strength off the bottom. What we mean by that is some type of wide-ranging bar with accelerated volume, and then you buy that first pullback out here. Remember, this thing, I don't know when it went public, but what we do know about it is it traded up at a high of 43 bucks. It's been cut by more than half out here. And I'd say, Sandy, there's better trades for you than this. But I don't want to sway you away from Laser Enlight Inc. I think at this stage here, to answer your question, you need to be patient. And that's at least what I would do out there. So thanks for writing in. Much appreciated. I don't see any other questions out there. Nothing inside the Tiger's Den. So let's go surfing safari out here, see what else we can find to chat about. Yeah, here's the Dow. Victor had called in. We were talking about the Dow out here, and Victor said he had a dream. For me, that would be a nightmare. And that's price pulling back to the November 2016 level. But before price gets back there, which is in, I don't know, the 18,000, 17,000 area, but just simply take things one step at a time. Now, in the case of the Dow, you can see this little declining price channel. That looks to me like price has been trading within. So if there's going to be a change in trend versus a counter trend rally, you'd see price close over the top of the red diagonal bar from kind of upper left to lower right out there. Price has not yet taken out the low that formed a swing point from back in June 28th. So that's the next level of testing that would have to be done, 23,997 out there. It looks like somebody's got their hands up. Tarpon 2 inside the Tiger's Den is asking for Xilinx for a long based on 5G, maybe the next NVIDIA. The next NVIDIA has been called out there, so let's go check into it. XLNX. Yeah, XLNX. Yep, there we go. So you're looking for an entry. Is that XL? Looking for a long, or maybe you are long. SLNX for long. No, I think you're looking for an entry out here. So what are we going to do here? This is a tough one here, Tarpon. The reason why it's slightly tough is it may have hit resistance yesterday, the day before, and today, which is the top of its profile out here. And I'm going to guess if we do a retracement, meaning from its most recent high out here on October 3rd down to the low just a few days ago, back on October 24th, it's really right up at the 0.786 level. So what we don't know with regard to this equity, is this forming an A to B equals CD down? Or was it forming an A to B equals CD to the upside? And I don't know the answer to that question out here. So you're looking for a long play. If you're looking for a long play, what should you do? What should you do? I think you have to wait to see if resistance is taken out, 80-12. If it's not, then what you want to do is see if price will pull back to the bottom of that profile. Bottom of the profile, 73.30. Point of control, 73.58. That would be your range out there as long as it's pulling back on light volume. Well, the cool thing is you have a swing point down here from October 24th that has 5.5 million shares. Today you've done 1.7. So you'd be looking for a pullback into that level on less than 5.5 million shares, preferably 73.30 out there. So that's what I'll be watching as I'm taking a look at the daily time frame, because it's not clear to me whether this is going back to test its highs, which, by the way, the high out here, the swing point high, the most recent one, October 3rd, had volume of 5.5 million shares. You're pushing higher with light volume as well. So I think you have some time on this, the daily time frame chart. When we take a look at the weekly time frame chart, and look, this is beautiful because this is certainly much stronger than market out here, right? No pullback in the month of October. It's basically flat or unchanged versus the month of September. Oh, I've got this on a quarterly time frame. Let's try to change it to quarterly. Well, there, no real. Well, let's put it to monthly. Let's put it back to monthly. Let's look at the right thing. So on a monthly basis, basically unchanged. So at least I got that all set out there. You know, here this shows 70.63 to 67.63 was a support level. Let me put this on a, give me a second if you would, on my other chart, XLNX out there. I just want to see if there's any kind of topping pattern, any type of topping signal for you. And the answer is there isn't. Here's the monthly time frame out here. And this does look really very good. But why don't you wait to see, use the daily information that you and I just looked at, see if this thing will pull back for you, and then go ahead and fire away, because right now it's just trading up simply into the top of resistance. So that was for Tarpon 2 inside the Tiger's Den. And I think I got everybody there, right? Fletch, what did you have, a question? No. Fletch was just making a comment out here. And I've got no other questions inside of the email system. Okay, so what are we going to look at now? Probably not much because we got about 10 seconds just to kill, if you will, just before we go back to a breakout here. So Dow's up 162. It's all about the Russell. up 14 right now, traded into resistance. Hasn't been able to close over resistance out there. Hey, how about that U.S. dollar? You got to like that. Trade out at 96.68. It's got an A to B equals CD to the upside that it's going to fulfill. It's headed higher, 96.62. And then it's headed even higher, 97.58. It's a beautiful thing. Steve Rhodes with TFNN. We'll be right back.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So just to go ahead and close out the hour here, I mentioned we were taking a look at the U.S. dollar index, and so I gave you some price targets there, some A to B equals CD price targets. It's taking out a swing point as we speak right now, and I said it's going to head much, much higher. Now, the components inside of that are going to be the euro, the yen, the pound, the Canadian loonie, the Swiss franc, and the Swedish krona out there. And I'm not talking the kind where you put a lime in the bottle, but there's nothing wrong with that kind of corona. But if we take a look at the month has not ended, but we're looking at a monthly chart for the Great British Pound, similar to what we looked at when we were taking a look at the GE chart. Now, when it comes to currencies, we don't have volume. So what we do is we have to use our typical technical tools, swing points, where closes, are there rejections or not? And in this case here on a monthly chart, it looks like the Great British Pound sterling is going to close back inside its swing point from back here in October 2016. This says, hey, wait until price gets down to 119.50. the bottom of that swing point, which it looks like that's what it's going to do. So that will go ahead and put some pressure into the U.S. dollar. When I say pressure, pressure to move higher. Hey, if you're sitting over there in London, just logically, and you're throwing back a couple of nice Guinness stouts out there, you loosen up and you're saying, yeah, you know what? I think I might want to own U.S. dollars instead of these pound sterling here while we go through this Brexit stuff. But right now, as we speak, at 1:55 in the afternoon on October 30th, and this is no trick, it looks like the Great British Pound, because of where it's going to close inside its October 2016 swing point, is headed to $1.19 out there. So, folks, thanks so much for being here. Hey, do yourself a favor. Go over to the homepage at TFNN.com. Sign up for Basil's newsletter service. Get into tonight's workshop. That would be a beautiful thing. And stay tuned, because your favorite polar bear, my favorite polar bear, Coca-Cola, even Pepsi's favorite polar bear, David White, he's up next. So have a great Tuesday. We'll see you on, hey, Trick or Treat, the real Trick or Treat Wednesday. Have a nice Tuesday. We'll see you soon.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.